In this session, we will be focusing on another question which deals with the preparation of schedule showing changes in working capital. The question goes like this: from the following balance sheet of XYZ Limited, prepare the statement showing changes in working capital. They've given us 2 years balance sheet, which is 2019, 2020. They've given us the details of the assets and the liabilities. They're requesting us to go about with the preparation of the schedule showing changes in working capital. So let's start off with the preparation of schedule showing changes in working capital for this particular question. Before we go about with the preparation of the schedule showing changes in working capital, let's just quickly run through the items to see which would fit where. For us to prepare the schedule showing changes in working capital, we must know which are the current assets, which are the current liabilities. So let's quickly run through this. Let's see which are our current assets, which are the current liability. We'll start off with the assets. Land, it is a fixed asset. Machinery, that is also a fixed asset. Stock, this is a current asset. Bills receivable, this is also a current asset. Debtor, that's a current asset. Cash in hand, this is a current asset. So we have 4 current asset items. Now let's move on to the liability side. Equity share capital, it is a part of the capital by itself. Profit and loss account, it is nothing but your net profit. General reserve, this is also not a part of current liability. Provision for taxation, you can treat it as a current liability. You need not treat it as a current liability. So we already know that, or we are already familiar with the fact that when it comes to provision for taxation and the proposed dividend, these 2 items, we have an option. We could either treat it as current liability or non-current liability. So for this particular question, provision for taxation, I am not treating it as a current liability. Sundry creditors, you can treat it as a current liability. Bills payable, you can treat it as a current liability. Outstanding rent, you can treat it as current liability. So we have 3 items in the current liability side. So with that, we have we've run through the discussions, and now we can go at the looking about with the preparation of the schedule showing changes in working capital. I have prepared the format of the schedule showing changes in the working capital over here, and let's go about with the preparation. And let's quickly type in the current assets that we have. The current assets that we have are stock, and we know the stock amounts are 1 lakh and then 85,000. So if you look at stock has changed from 1 lakh to 85,000. So what impact does it have on the working capital? Working capital will decrease. Okay, working capital will decrease. It decreased by 15,000. Next is bills. The receivable, and bills receivable is 50,000 and then 30,000. So if you look at bills receivable also, what has happened with bills receivable? Bills receivable has reduced. So bills receivable reduction will cause a decrease in your working capital. Working capital will reduce by 20,000. Okay, working capital will reduce by 20,000. Next is debtor. Okay, next is debtor. Debtor is 1,50,000, 1,60,000. Now notice what has happened with debtor. From 1,50,000, it has increased to 1,60,000. So what has it brought about? It has brought about with the increase. It is increase of 10,000. There's an increase of 10,000. Cash in hand, and then cash in hand is 20,000. Here also it's 20,000. So what does this mean? What this means is cash in hand, it remains the same. It has no impact. Okay? It has absolutely no impact. Okay? So now we have calculated the total of current assets for 2019, total of the current asset for 2020. 3,20,000, 2,95,000. Now let's move on. Let's move on to the current liabilities. What are the current liabilities that we have? Like I told you earlier, provision for taxation that we are not considering. Provision for taxation that is not being considered. Next, what we have is sundry creditors. Okay, sundry creditors. Sundry creditors, it is 1,10,000. And then there is 1,30,000. 1,10,000, 1,30,000. Now, here sundry creditors from 1,10,000, it has increased to 1,30,000. Okay, so from 1,10,000, it has increased to 1,30,000. So, what impact does it have on the working capital? Will working capital increase or will working capital reduce? Working capital will reduce by 20,000. Next item. Next item is bills payable. The next item is bills payable. Bills payable is 80,000. Bills payable is 90,000. What has happened with bills payable? From 80,000, it has moved to 90,000. What impact does it have? So here, bills payable has increased. Now, please remember, bills payable is a liability. But that liability, what will happen to that liability? So that increase in liability will cause a reduction in the current working capital. So it is 10,000. Okay, it is 10,000. Outstanding rent. Okay, now, how much is outstanding rent? Outstanding rent is 10,000, and here it is 25,000. So from 10,000, it has increased to 25,000. What impact does this have? The impact that this will be having is that here, outstanding rent, this increase in outstanding will bring down your working capital by 15,000. Now, we have also calculated the total current liability. So first year it's 2 lakh, second year it is 2,45,000. Then we've calculated the working capital. How do we calculate working capital? Working capital we will be calculating by subtracting the current asset from current liability. Current asset from current liability. Here it is 1,20,000. Here it is 50,000. So what has happened? If you notice, first year's current working capital value is 1,20,000. Second year it is 50,000. So what is this? This is nothing but a decrease in working capital. So this is nothing but decrease in working capital, and working capital here it will be 70,000. Okay, here it will be 70,000. So notice why have I written it over here? The reason why I have written it over here is because when I add up the total, it should be 1,20,000 over here. So this is nothing but your balancing figure. So here also it should be 1,20,000. 50,000 plus 70,000, it should be 1,20,000. Okay, so we have completed the preparation of schedule showing changes in working capital for this particular question, and this involves a decrease in the working capital.